What's going on, market makers? Another Pro Trades update. Today we're going to cover, by popular request, the metals, gold and silver, guys, and we'll throw in the SPX and the Russell 2K just to get a health check on those as well because they have been rallying. Guys, I don't know if you saw Biden's last speech slash presser he did afterwards. I know most people probably didn't. I suffered through it, but he gave some rambling, bambling answer to a question, I think, or might not have been a question, just might have been a comment about his bill not getting passed, a Build Back Better bill, which is almost $2 trillion. And he said something like 30 Nobel laureates have signed on to it, saying it'll reduce inflation. He said it's the first time he really publicly spoke about inflation, which previously he said was transitory, but now that the Fed retired that word, he said inflation really hurts the poor and middle class, which it does. It's a regressive tax. Everything costs more. It hurts everybody that lives on a paycheck. But it was interesting because he was claiming the stock markets dipped because the bill didn't get passed. The bill didn't get passed because of his own party. His own party voted against it. They had one vote, Senator Joe Manchin, that voted against it on the Democrat side. Other than that, it was right down party lines. The reason the stock market dipped the other day was not because of the bill not getting passed. It was, but not for the reason he's stating. It dipped because that's $2 trillion that's not going to get printed out of thin air and put into circulation in the economy. We've added 36% of our money supply since COVID. We've printed 36% of dollars in current circulation since COVID. The United States borrows 43 cents out of every dollar we spend. Okay, it's inflation nation. That's what we are right now. That's why also we're going to look at the metals, because why aren't the metals doing better than they are right now? Let's look at the charts. The charts tell the story, guys. So here's gold. Gold had that nice rally. We got up to just over 1870, and then we fell down, right? We fell apart, got a double top here, fell apart, and we've just been trending in this lower tranche, catching a bearish pattern here. That fell apart. Now gold is pumping back up, but we printed yet another bearish pattern right here at the resistance level of 1830. 1830 is a key level in gold, guys. It's a psychological level, but it's also a level people take profits at. Okay, you can see it in the charts. But if we just throw let me get my fib going here so I can show you some targets to expect for resistance. So the 618 is the most commonly retraced to fib, and it lines up pretty close with GAN here at 1830. You can see that, and you have a Fibonacci bearish pattern that printed the black swan. So I would anticipate this once again being very difficult for gold to get above. So when will gold get more bullish? Because I am a gold bug, I'm a silver bug, I'm a precious metals bug. But guys, honestly, looking at the macroeconomics, these things aren't going to do well while the stock market's doing well, okay? So you're looking at next year. And honestly, it's probably going to happen when the Fed actually, if they're able to raise rates, because a lot of people think they won't be able to do it because of the economy. Lots of people think the economy is going to be slowing down a lot, even though the Fed projects 4% growth. If the Fed does start raising rates, this is, I think, when you will see gold and silver make some quality gains, because right now they're just ranging. Okay, this is a long time of range. This is over a month basically of just ranging here in chop, back and forth, back and forth, back and forth. Now you're going to climb up a little bit, and then you may be falling back down. So we will be trading this in the room. If we do see a short or we see a long that's worth taking, we'll definitely trade it. By the way, guys, if you want to check out the Pro Trades room, we are doing a special from here to New Year's. Love to see you guys in the room. It is the best time to join. It is a limited room where we trade stocks, commodities, and Forex using Fibonacci trading tools and Fibonacci patterns. And we have educational videos as well as TA and live streams for these rooms. So check it out. The link is in the Discord description. And I trade personally on SIMPLEFX. That link is in the Discord description. They have a bonus going on right now. I think it's $2,500 if you use my link, and it may be up to $5,000 for the month of December. So it can be a lot of money. So check that out too, that platform. That link is in the video description. Let's go back to gold. So I like gold. I'll be a buyer if it does descend further. And if it comes up here, we do end up getting some turn down, I will be shorting it just to make money. It's all about financial freedom, guys. Let's look at silver. Silver as well, once again, same story, just not a lot of traction. And this goes back for, months. We had our high up here, and we were up in a higher level here in June. I mean, this is June, July, So, I mean, we start really pulling back here. So as you can see, silver's just been slowly descending and ranging, right? And once again, you caught yet another bearish pattern. So this is just, the gold and silver, like I said, in the stock market's near all-time highs, in that top 1% of the all-time highs. You're just not going to have a lot of momentum on either of these. These are traditional havens in risky times, commodities, particularly precious metals. So it's going to take more of a turn down, I think, for these to really take off. This is called a 5-0 pattern. And the way this pattern works, guys, is price travels just like this along this pattern here. It comes up to point D where it reverses, okay, and starts coming back down. This is a 5-0 pattern. And let me get my fib out. Let me show you some targets where we could find resistance at here to activate this pattern. So we could end up coming a little bit past the 5-0 point here, the 5-0 retracement. This is right on the 5-0, 0.5. You see that? The pattern's called a 5-0. It's right on the 0.5, the point D. So it's a very harmonic pattern. The 618 is the most commonly retraced 2 fibs. So I wouldn't be surprised if price is able to tackle this resistance. Now you do have this GAN resistance here, so a couple different situations here can play out. This is why you need to be in a trading room. A couple different situations can play out here. Price could come up, find resistance at GAN at 23.3, and then just start turning back down. Price could come up, come through GAN, and actually activate here at the PRZ and then start coming down. Or if you have some momentum going up, you could end up hitting the 618 or the GAN after that and then turn down. All these patterns is just Fibonacci points, okay? So price moves in patterns, it moves in waves. These actual images are just a visual way for your eye to see the price movements. These are very specific Fibonacci points, and you put them on the screen, so it really helps you visualize the pattern, and you can see these patterns, and they all have different names. There's a bunch of different patterns. I trade a set of patterns. My admins trade a set of patterns. We trade the patterns that we know have made us the most money and the most success in the past, okay? So that's what we always trade. So we'll see what happens here with silver. It's got a little bit more to go. It is currently at 22.75.9, and 23.3 is where it can find some resistance, and then obviously at 23.5 where you have the actual 0.5 fib is where you could find your resistance and turn back down as well. So again, both metals printed bearish patterns. So we'll see what happens and how far they drop. Maybe not a lot. I do enjoy trading these metals. Let's see what's going on with the dollar, guys. The dollar has just been ranging sideways. I mean, we had a really healthy dollar until the market pumped. You see this? Had a nice uptrend going for a long time now, all the way back since late October 28th, October 29th. Got a nice uptrend going, and now we just made a top. And we're just ranging sideways, catching these small bearish patterns. We are printing some other type of pattern here again. Let's see what we have here. This type of W pattern. We don't have our C point yet, which is down here. So I'm just going to stick this, even though these candles could come lower, just to get an idea of what we're looking at. I mean, this could be this could be a butterfly, which we printed a couple of these now already. A couple different activation zones for a butterfly. You can be right at 1272, this D point right here. So you could be right here, which is 97.192 on the dollar, or you can go out to the 1618, which is right about there, which is 97.55, and then you have the GAN resistance at 97.7, and the 618 fib just above the GAN. So this is the quadrant that I would anticipate the dollar getting to if it gets some bullish momentum. Up here in this range is where it should be able to get to, and then you have a lot of resistance, okay? Then you got GAN resistance, you got a bearish pattern that printed, and you have the 618 fib. So if you can flip 97.7, that's very, very bullish. If not, you're going to hit it and retrace, and you'll make some other type of candlestick pattern and move up or move down, and life will progress and go on. Let's move forward. So the Russell 2K, guys, as you know, I threw this in the Wyckoff price cycle. This is the Wyckoff price cycle, 4 key phases down here at the bottom: accumulation, markup, distribution, markdown. That's the 4 key phases. Within that, you have Wyckoff springs, you have reaccumulation, you can have redistribution, bunch of different sub-phases, but that's the 4 key phases that keep it simple, okay? And as I said, I do believe we are in a Wyckoff distribution box, and we've been in this box since January of this year, actually going back into December, but let's just say January 11th of this year. And as you can see, it's just volatile price movements up and down, price constricting to within a few percentage points, all the way to making a new all-time high, all the way to dumping, okay, 13%. So it's this very volatile box. Key characteristic of distribution box in the Wyckoff price cycle. And if we do lose this bottom number, this will be very bad because this number is at, where are we at? 2061. And these are small caps, and they lead the large caps. So if this does go in the markdown phase, where the Russell 2K loses some velocity and price momentum turns down, you will see some bearish markets because the larger markets will follow suit. We talked about this, I guess, a video or two ago. Here's the Russell. We had a bullish black swan print. And like I said, I wasn't interested in this pattern unless it got through the DMA cloud. And look at that. Along with the SPX, Russell, everything went up today. And you got a nice pump back up here on the Russell. Going to find some resistance here again at 22.55 most likely. Candles may be fading out a little bit. ATR is elevated. I can't see the volume. Exchange is closed, but ATR is elevated, so we'll see what happens with this. But, you know, overall I'm bearish on the Russell because it's just, as you can see in a distribution box, it's just, it's a couple of bad trading days away from a correction. So we'll just keep an eye on it. And on top of that, another reason I'm bearish, you do have an incoming EMA Death Cross. Now the 21 went, what's that called? Horizontal here. The 21 went horizontal here, and as you can see, because the candle's pumping up, but at some point you get a downturn in price. Look how close to 21 and 233 are, and keep in mind it's 6.5 months of trading range, okay? You need to be above the 233. This is on the daily, and if these cross, if the blue line crosses the red line, that is an EMA Death Cross, okay? Very bad. The last one you had was during COVID. And I went over that last video, but you had a nice crash from that, a very severe crash. So we'll see what happens if this does occur. These are lagging indicators. Moving averages, EMAs, are lagging indicators. So you can have this have a death cross and you can still make a new all-time high. And then all of a sudden, you know, a week later, 2 weeks later, you can have a crash 30, 40, 50%. So just something to keep in mind. Doesn't mean anything bad will happen, but if you review the history of EMA death crosses, they've been very brutal. Now that I'm talking, let's just go look. We'll go because I don't remember the exact percentage. I want to quote it to you. Let's go look at COVID, okay? We'll find the COVID death cross right here. So last time you had, when you see this, the blue line cross the red line. I mean, look at that. Look at that dump. Hold on. Let me shrink this up. TradingView's having a hard time catching up here. Let me have it sync up, and we'll go, like I said, we'll just grab it after the cross. We'll actually be kind, and like I said, we'll grab it from one of these candles, even though you could technically grab it from up top there. But that was a 37% crash. Okay, anything over 10% is anything over 10% is a correction. 10 to 20% is a correction. Over 20% is a crash. So that was a crash. That was the last time you had an EMA death cross. And once again, that is right here. That's a 21. Crossing the 233. These are EMAs, exponential moving averages. They are weighted towards the front for price action, whereas simple moving averages such as the 20 and 200 are evenly distributed with the weight, okay? So these are more powerful in my opinion, just from the reviews that I have done on the different assets that I trade. They tend to happen less frequently and with more ferocity. So I'll keep an eye on this, and I'll keep you guys updated on that as well. Let's look at the SPX, because we traded this in the room. One of my market maker admins, Mark, he posted this trade. This was a fantastic harmonic cipher here. I posted the Black Swan. We got a great decline from that. And then he posted the bullish pattern, the cipher. And the cipher got us up. And this is, I mean, we're at, it's after hours right now, but we're at 4,700. I mean, you know, this is, it's not a Santa Claus rally yet, but I mean, it's nice movement up. I read an article right before I came to record this video. It said record amount of money from retail is pouring into the options market. So, you know, we had a record amount of money going into buy the Omicron dip from retail, and a record amount of money now, as of today, pouring into options, I'm assuming, to take longs. Look, the market is overall very bullish. Okay, the sentiment, I think, of the average person is probably bullish. I think JP Morgan still has, it's either JP Morgan or Goldman still has, you know, 50, I think I want to say 5,700 prediction going into next year for S&P. I don't have the article in front of me. But, you know, I'm in that camp where I believe there's going to be a correction, which is at least 10% and potentially a crash. Okay, I think we're due a couple corrections. But again, I'm in that camp. I don't think that these things necessarily will happen until the Fed actually raises rates. A lot of people, a lot of hedge fund managers, a lot of portfolio managers don't think the Fed will actually raise rates. They don't think they will be able to because of the state of the economy. So when they do, that's when I expect some severe market reaction to it, okay? So we'll see as that progresses. And guys, thanks for watching the video. Please like, please subscribe. Come check out the room. No risk, no obligation. It is a New Year's sale. And if we don't talk again, my friends, which I'm sure we will, it's Wednesday, but if we don't talk again, if you don't happen to see my videos, have a fantastic holiday week with your family and friends. And another video coming tomorrow, guys. Take care.